Welcome to Matters Financial and Geopolitical from the Frontier. Thank you for stopping by. It was really a pleasure presenting a perspective on sub-Saharan Africa to investors in the Catalyst Principal Partners Fund. Catalyst is a private equity business that an old school friend of mine, Paul Kavuma, seen in this photograph, set up. We were at Kenton together when we were 9 years old. Feels like an eternity. Quite often now it's a mixed school. In my day it was a boarding school and much more touchy-feely than we remember it. Macro thoughts. Kenya sold $1 billion of 10-year bonds, which was priced at 7.25%, and $1 billion of 30-year debt, which was priced at 8.25%. Initial pricing guidance was set out higher at 7.625% and 8.625%. Order book was $14 billion. When I spoke to John Aglinby at the Financial Times, I'd only seen the initial guidance, and I said then that the bonds were priced to clear. I thought they were going to call it for $3 billion. And that they wanted to raise it quickly. I also said the government's motivation for raising so much dollar-denominated debt is to inject liquidity into the economy. This economy needs liquidity like a shot in the arm to get going again. Price-wise, it's very generous in order to get the amount they want. And then subsequently, obviously, they brought the rates in and took only $2 billion. Citi, JP Morgan, Standard Bank and Standard Chartered Bank acted as book runners on this week's deal. There was a downgrade by Moody's. It is rated B+ stable by S&P and B+ stable by Fitch. I had expected the government to raise $3 billion, but once they cut initial guidance, 7.625%, 7.25%, 8.625% to 8.25%, I could see that they were elected to draw down less, but at a better rate. Governments across sub-Saharan Africa are hitting international debt markets hard and fast to try to beat rising borrowing costs, pushing the region's debt levels to new highs. Nigeria has raised $5.5 billion over the past 3 months. Kenya, $2 billion. Angola, Ivory Coast, Ghana and Senegal are all queued to sell. The flurry of issuance adds to an already record debt tally for sub-Saharan Africa, which has ballooned to over $200 billion from less than $30 billion in 2007. If you have a lot of issuance in a short period of time, that tells you something, said Kevin Daly at asset manager Standard Life Aberdeen. S&P Global Sub-Saharan Africa ratings have dropped around 2 notches on average since 2008, from BB- to B, whereas across all emerging markets the fall has been only about half a notch, from just above BBB- to just below. Moody's downgrades in Sub-Saharan Africa have outnumbered upgrades 21-2 since the beginning of 2015. On the 5th of February, I said emerging and frontier market borrowers surely need to get their skates on and pull the trigger real quick on any borrowing they'd been considering for this year, and indeed they are. Let's go to Venezuela, where the Petro apparently will have the capacity to overcome blockages, delays, limitations of the traditional financial system, favoring growth of a new system based on trust, integrity, transparency, efficiency, and speed that guarantees blockchain Venezuela's Satoshi rights. Venezuela aims, this is what Reuters is saying, but it could also be my conclusion, aims for crypto alchemy with new Petro gold token. And this from Holger, 1-year fluctuations of the world's 3 biggest cryptocurrencies. Take a look at that hardcore data. It's really remarkable stuff. And then I like this from Peter L. Brandt. A trade is nothing more or less than a datum point in a series of data points. Home thoughts. There is a voice that doesn't use words. Listen. It's Rumi. Zach Sunday tweeted, "You are welcome to Nairobi in the meantime." Lovely photograph there of Nairobi. We marked the year of the dog with Elliot Irwitt. Magnum photos, they seem very keen on Dalmatians. I like this photograph from Stu_Mundle. I wonder which city that is, or is it just a simulator? You never know. Thomas Pynchon's Gravity's Rainbow. If they can get you asking the wrong questions, they don't have to worry about the answers. And my favourite from Gravity's Rainbow, I dream that I've found us both again. With spring so many strangers' lives away, and we so free out walking by the sea. With someone else's paper words to say, they took us at the gates of green return, too lost by then to stop and ask them why. Do children meet again? Does any trace remain along the superhighways of July? Political reflections. North Korea's economy grew at its fastest pace in 17 years in 2016, South Korea's central bank said on Friday. GDP in North Korea last year rose 3.9% from the previous year when the economy contracted due to a drought and low commodity prices. The expansion was driven by mining and energy and marked the biggest rise since a 6.1% gain in 1999. North Korea, which counts China as its biggest trading partner, also boosted exports by 4.6%, the most since an 11.8% jump in 2013. Still, the isolated state's per capita gross national income in 2016 was just $1,342, less than 5% of the comparable number in South Korea. China accounted for 92.5% of all North Korean trade, according to data from the Korea Trade Investment Promotion Agency, KOTRA. I've written several pieces on Korea. Latest piece was 12th of February when I was saying Kim Jong-un unleashed his secret weapon on the world. That secret weapon being his sister Kim Yo-jong, who evidently bamboozles South Korea's President Moon River. 18th of September, I wrote a piece, "A Screaming Comes Across the Sky," borrowing something from Thomas Pynchon. I said Gravity's Rainbow is a 1973 novel by Thomas Pynchon, which is about the design, production and dispatch of V-2 rockets by the German military. In particular, it features the quest undertaken by several characters to uncover the secret of a mysterious device named the Schwarzgerät, the black device, slated to be installed in a rocket with the serial number 00000. As the world watches Pyongyang, I cannot help wondering if Kim Jong-un has read Pynchon, which speaks of a screaming comes across the sky. It is a curve each of them feels unmistakably. It is the parabola they must have guessed, once or twice guessed and refused to believe, that everything always collectively had been moving toward that purified shape latent in the sky, that shape of no surprise, no second chance, and no return. And then in November 2010, I wrote about the elves and the shoemaker. Far away in distant lands lies the hermit kingdom. They have all had tiny little hands like the elves and the shoemaker. This country has nuclear weapons, and on its border with its neighbor South Korea sit 25,000 American soldiers. Have a look at this video of President Magufuli landing in Uganda for the East African Heads of State Summit. His body language is very alpha male, if you'll note. Britain's top spies revealed, this is in the Private Eye, tongue-in-cheek of course. He cannot distinguish between the national interest and his own insecurities, making it impossible for him to acknowledge the nature of the Russian threat. Bill Galston, The Wall Street Journal. White House staff gave Trump notes to keep him focused at this afternoon's listening session, but they couldn't control his body language. Finally, a final political reflection inside a Florida gun show days after the Parkland shooting. Now, you will recall in September 2016, I wrote a piece called Mirrors on the Ceiling, the Pink Champagne on Ice. And I was talking about the bond markets, and I said if volatility spikes, positions are going to be reduced en masse, or to put it another way, and to borrow the lyrics from the Eagles, Hotel California. Mirrors on the ceiling, the pink champagne on ice, and she said, we are all just prisoners here of our own device. Last thing I remember, I was running for the door. I had to find the passage back to the place I was before. Relax, said the night man, we are programmed to receive. You can check out any time you like, but you can never leave. US yields made notable moves post the FOMC minutes. The 10-year yield rose to 2.95%, the highest since 2014. Currency markets, let's take a quick look at that. Euro dollar is at 122.74, below 123. Dollar index 90.14. Japanese yen 107.33. It strengthened 43 bips. The pound is at 138.93. The Australian dollar, which dipped below 0.7800, is now at 0.7807. Indian rupee 65.065. South Korean won 1082.35, Brazilian real 326.93, Egyptian pound 17.6804, and the rand 1170.23. Dollar index, let me put up a 3-month chart. We've had a rebound. I think we're still looking constructive. The higher rate structure is going to support the dollar. Euro drops below 123 as 10-year US Bund yield spread widens to 223 basis points. The highest since January 2017. Walmart operating margins dropped to an all-time low driven by Amazon competition. This is Holger again. Amazon shares surpassed $1,500 for the first time in intraday trading. They've eaten up the world. Commodity markets, crude oil, let's take a look at where that is, $61.04. We've come off the highs that we saw in early January, but we could see a rebound. Crude oil always doesn't go down in a straight line. Gold turning down from its 4+ year resistance level, that's Peter L. Brent, last trading at $1,322. Frontier markets, if you thought frontier investing was high risk, here's some comfort. This year, the markets of nations such as Argentina, Morocco, and Vietnam are giving the best volatility-adjusted returns among the 3 MSCI groups, suggesting they have weathered the sell-off since late January better than their peers. And it was the same story in 2017, when frontier nations produced the best risk-adjusted returns for any group in the past decade. The chart below shows frontier markets typically hand investors either the best or the worst annual returns when the volatility risk is netted out. There is no middle path. Interesting article, do take a look. Sub-Saharan Africa, Africa's power shuffle is a renewal, not a revolution, says David Pilley. It is tempting to call it an African Spring in a matter of months in countries as disparate as Angola and Zimbabwe, Ethiopia and South Africa. Entrenched leaders have been falling like 9-pins. Last week it was the turn of the Ethiopian Prime Minister Haile Mariam Desalegn, who quit after years of public protest against the regime and increasingly open discord within the coalition that has run the country since 1991. His sudden departure came just a day after, half a continent away, Jacob Zuma finally agreed to resign as president of South Africa to make way for Cyril Ramaphosa. Those dramatic events followed the even more unexpected fall of Zimbabwe's Robert Mugabe, who many thought would die of old age before he was pushed from office. Instead, he took the hint that it was time to go when tanks rolled onto the streets of Harare last November. And just 2 months before that, in an orchestrated but still highly significant change of leadership in Angola, João Lourenço took over as president from José Eduardo dos Santos, whose 38 years in charge beat Mr. Mugabe's stint by a year. What on earth is going on? Should African leaders be shaking in their boots as a renewal sweeps across the continent? Africa, as people repeatedly point out, is not a country. It is a complex continent of diverse nations whose histories, languages, and political cultures make them hard to meaningfully compare. There is no reason to believe that events in one have any connection to happenings in another. Yet that doesn't mean there are no common themes. After all, countries in entirely different continents, take the Philippines, Hungary, and the US, may be prone to the same forces of populism or nationalism. One thing Angola, Ethiopia, South Africa, and Zimbabwe have in common is that they are run by liberation parties that have ossified in power for between a quarter and a half century. In Angola, the popular movement for the liberation of Angola has run the country since the Portuguese left in 1975. In Zimbabwe, ZANU-PF, which led the armed struggle against white minority rule, has been in power since 1980. Similar, Mr. Desalegns' Ethiopian People's Revolutionary Democratic Front has ruled since 1991. Although he has been Prime Minister only since the death of Meles Zenawi in 2012. And in South Africa, yet another liberation movement, the African National Congress, has dominated power since apartheid crumbled in 1994. In South Africa, particularly in the Zuma years, the righteous task of spreading wealth to the black majority morphed into the less righteous one of spreading it to an ANC-connected black elite. Change now is partly driven by the pent-up frustration of the millions left out. The public has found its voice, pushing the ruling elite to shuffle leaders in the cause of survival. South Africa, by far the most democratic of the four, ANC support has skidded in successive elections, and the party has lost control of four of the country's most important cities. But even in the other three countries, where elections are far more controlled, opposition forces have found a way to express themselves, both through the ballot box and on the streets. Still, in each country, the ruling elite has engineered a personnel change in the interest of self-preservation. Very true. More than revolutions from below, they are partly reorganizations from above. Other leaders on the continent will be watching, some fearfully. But African Spring does not capture what is going on. You could call it instead the season of the palace coup. My piece was touching on a similar point over the weekend, the wind of change. In that, I also said Africa is not a country, it's a ubiquitous meme, and at its core is an absolute truth. The continent is non-linear. Kinshasa is not Addis Ababa, it's not Lagos, it's not Pretoria. However, I said a wind of change is blowing through this continent. I admit, like David has said, it's come from the top, but make no mistake, if they don't reform, they're not going to succeed. Ethiopia's great rift. Will a power struggle within the ruling party lead to reform or more repression on its foreign policy? For vulnerable African countries, a reliance on Chinese financing could pose a threat to sovereignty, says Ronak Gopaldas in the ISS. Sri Lanka's recent dealings with China offer a cautionary tale for many African countries. The way the island nation has ceded control of the strategic port of Hambantota highlights the issue of debt-trap diplomacy. It poses the question of whether developing countries are naively mortgaging their resources and strategic assets to China. China makes financing relatively easily available, albeit with certain conditions and less paperwork than conventional sources. China's tied aid for infrastructure usually benefits Chinese companies, while its loans are in many cases backed by natural resources. Through this method, China achieves the twin goals of economic penetration and strategic leverage. And then talking about the Djibouti base representing the first pearl in China's string of pearls, a theory regarding the country's Indian Ocean ambitions along the sea route connecting China to the Middle East. The strategic similarities to Sri Lanka are obvious. African countries do need investment. Substantial loans from China are helpful, but there is a catch. With narrow revenue bases and undiversified economies, there are doubts about whether these countries will be able to service debt, especially against a backdrop of weak commodity prices. In Djibouti, the situation is particularly alarming. The debt with China increases exponentially. They're going to take this port just like they did in Sri Lanka. Many states have to resort to payments in kind which effectively amounts to a country handing the asset back to China, a la Sri Lanka. This has led to Beijing's role in Africa being criticized by Western governments and some Africans as neo-colonial. However, while there is a tendency to paint China's financing as predatory, African political elites are also complicit, argues China-Africa expert Dr. Lucy Corkin. China provides a convenient scapegoat but doesn't absolve governments from brokering shoddy deals that don't benefit their people, which is the right point. August 2017, I wrote a piece called China Rising. I said Sri Lanka, which had gorged on Chinese debt, has had to disgorge the Hambantota port to its creditor. I said recently we saw China formally open a military facility in Djibouti. These moves taken together speak to a material Chinese advance. 19th of February, I said you want to go limit long Cyril Ramaphosa. Have a look at the impact on the rand of the Ramaphosa budget. It's given up some ground now, but you can see how the market wants to buy the rand. South Africa's government bonds rallied as well, sending the yield down below 8% for the first time in 3 years. South African 2018 budget in a nutshell: VAT up 1%, deficit down from 4.3 to 3.5%, debt to GDP stabilizes at 56.2% now, only in 2022-2023. South African oil shares down 1.51% year to date. Dollar versus rand, we have a look at the chart. I think it's going to 11. Nigerian oil shares up 10.24% so far this year. This is the Palais de la Présidence de la République du Ghana, as seen from the Twitter handle of the Ivory Coast president. Ghana Stock Exchange Composite Index is up 29.28% year to date. Red Cap Man says Zimbabwe's new president has luck on his side. The ZAR rally in recent months is a big help to Zimbabwe's balance of payments. Let's move on to Kenya. Crackdown on dissent puts Kenya's democratic credentials at risk. Once considered an island of stability in a neighborhood bedeviled by conflict and one-party rule, Kenya is mired in a protracted electoral dispute that's undermining its democratic credentials. Political tensions have been simmering in the East African nation since opposition leader Raila Odinga boycotted a rerun of a presidential vote in October, rejected the declaration of Uhuru Kenyatta as the winner. They flared again when Odinga declared himself the so-called People's President last month, and the authorities cut off TV stations airing the ceremony, initially ignored a court order to restore broadcasts, and deported a prominent opposition lawyer. Dispute has weighed on Kenya's economy, the region's largest, with growth slowing to an estimated 4.8% last year from 5.8% a year earlier. That may undermine efforts to create jobs for more than a third of the potential workforce who are unemployed. The opposition drew criticism for failing to see the electoral process through. The government responses raised concerns about Kenyatta's commitment to the rule of law. Nobody was expecting him to go to such lengths to keep fighting political battles. This is not an electoral blip. It calls into question the political and constitutional structure of Kenya. The Interior Ministry denied there's any crackdown on political opponents. The government is becoming more disciplined and focused on ensuring that discipline is followed. He accused the opposition of using extra legal means to sabotage the government. I call it an asymmetric strategy, but I think it's running out of road now. Kenya has a very strong constitution and strong institutions. Once people have tasted certain levels of freedom, the genie is out of the bottle. You cannot put it back. In terms of Kenyatta's position, the ruling Jubilee Party are at the strongest position they have been. Suckling said by phone, I imagine their strategy is to let Odinga and his nationalist movement run out of steam and they don't have to do much. I think that's correct. Cabinet Secretary Monica Juma was seen yesterday meeting with the UK High Commissioner to Kenya, Ambassador Nick Haley, who's a friend with whom I was at dinner earlier in the week. Uchumi reports first half earnings per share was negative 2 shillings and 45 cents, which is 63.33% worse than the previous full year. Net sales crumbled 71.493% to 526.965 million. Gross profit down 78.587% to 146.968 million. Loss after tax was 895.177 million versus a loss of 547.31 million the time before. Cash and cash equivalents is negative 484.046 million. No dividend. Loss per share 2 shillings and 45 cents versus a loss of 1 shilling and 50 cents before. They said the management continues to work closely with the board in the implementation of a restructure strategy aimed at returning the organization to a positive and sustainable EBITDA position. Clearly this cannot continue as is, and it's unclear to me now where the equity investor is, if anywhere. Nairobi Oil shares up 6.14% this year. The NSE 20 is up 0.49% this year. Once again, thank you for stopping by.